Hey there, hope you're having a great day. Can you subscribe to this channel, please? Maybe you want to watch the video first. That makes sense to me if you'd like to do that, and then subscribe, but give it a thought. I want to talk about mortgage interest rates today, so I've got my little bond chart that I'm going to get it larger. Okay, mortgage rates are based on mortgage bonds. Mortgage bonds go up, rates come down. Mortgage bond prices go down, rates come up. So this is a chart. Those are each a daily movement in a bond since first of the year, 2022. And what are we looking at here? So let's take a look. The year started out, general trend lower. We got some recovery there, middle of January. Had a bad day here, general recovery. And since then, since the end of January, really, February has been pretty much a stinker with bond prices coming down and rates going up. This was a jobs report announcement. This is an inflation is worse than we think announcement. Since then, I'm going to call this week kind of flatliner, and I think that's kind of where we're going to be going forward. The hang on a second, there we go. We've gone up maybe 1%. This chart represents a percent in rate. So what used to be a 3% note is now a 4% note. And that's a large change in a short amount of time. So I think that all the worries about the economy coming back full strength, inflation worries, everyone's got a job and a half, all those worries that cause inflation and prices to rise are bad for interest rates, mortgage rates. Rates go up because of that. The Fed, of course, everyone's anticipating that the Fed is going to start raising their rates. And that is the intention of the Fed raising rates is to cool the economy. So if we get a general slowing down of things, if prices stop going up and level out, if we still have a healthy amount of people that don't have jobs, that's good for interest rates. So I kind of think that we've gone through the worst, the damage is done, we've jumped 1% in rate in a short amount of time, and now when the Fed comes in, things are going to start cooling down. Supply chain issues should start improving. So a more fluid economy, a more level economy is good for interest rates. So going forward, I kind of think we're in this band, give a quarter, give a half, around 4%, something like that. And then we'll just see who wins the war. Is the Fed going to win the war, or is inflation going to win the war through the rest of this year? So that's the news. There are a lot of buyers that were shopping last fall that now when they find a home, yes, it is a higher interest rate. One thing you can tell them, or one thing you can be assured of, is at some point in the next 2, 4, 6 years, rates will come down again for some reason, and then you can refinance out of that mortgage. So you can't refinance out of your house, but you can refinance out of your mortgage. That's what I tell people. Anyway, that's all I got. Hope you're having a great day. Again, subscribe if you get a chance. Thanks. Bye.